So today, we're taking a look at the global landscape. Like economics, politics, all that jazz.
A snapshot in time.
Right. We'll be hitting everything from trade wars, central bank moves, to the usual economic indicators, even how markets are reacting.
And a little touch of tech and geopolitics.
Oh, yeah. Can't forget those. It's going to be a fun ride, so buckle up. Get ready for some surprises. China's playing an interesting game, and Apple, well, they might not be the titan you thought they were.
Should be interesting.
Let's dive right in, huh? First up, a topic that feels all too familiar. Trade wars.
Back in the headline.
Yeah, tariffs are back on the menu, and this time, Canada's feeling the heat.
This feels like a bit of a deja vu, doesn't it? Kind of reminds me of Trump's first term, using tariffs as a negotiating tactic.
Right. But do you think it'll work the same way this time around? I mean, the world's a different place now.
Yeah, it's a good question. The global landscape has definitely shifted. Players like China have a much bigger role now.
True. So how are Canada and Mexico reacting to all this?
Well, they're not taking it lying down, that's for sure. Retaliatory tariffs are already being discussed.
Oh, wow. Things could escalate quickly.
Definitely has the potential to become a full-blown trade war. And, Goldman Sachs is already predicting a hit to U.S. consumers if that happens.
Ouch. Speaking of potential hits, this whole strategic decoupling from China that Trump's new trade chief is talking about, what's that all about?
Yeah, strategic decoupling basically means reducing how much the U.S. and Chinese economies rely on each other. It's a big idea, lots of potential consequences.
Such as?
Well, think about it, like supply chains, they'd have to reorganize, manufacturing hubs might move, could impact everything from, the cost of your phone to whether you can even find certain products.
Wow, that's huge. Okay, well, moving from potential trade wars to a bit more cautious territory. Central banks.
They seem to be taking it slow and steady right now.
Yeah, it feels like everyone's in wait-and-see mode.
Yeah.
The Fed, the European Central Bank, the Bank of England, they're all hinting at gradual rate cuts, but they're keeping a close eye on inflation.
Makes sense given all the uncertainty in the global economy.
Definitely. I mean, Trump's trade moves are a big factor, but there's also, slowing global growth, geopolitical risks, all that stuff.
Exactly. Cutting rates too aggressively in this environment could backfire, could trigger inflation or create asset bubbles. It's a balancing act, trying to stimulate growth without causing more instability.
So they're walking a tightrope. But there's always an exception to the rule, right?
Yeah.
In this case, it's New Zealand. The RBNZ just went all out, cut rates by 50 basis points.
Wow, half a percentage point. That's a big move.
And they're suggesting more cuts might be coming. What's going on there? Why are they being so aggressive?
Yeah. Well, New Zealand's economy is pretty sensitive to global trade, so maybe they're seeing some red flags that others aren't.
Interesting.
It seems like they're prioritizing a quick boost to the economy, even if it means taking on more risk in the long run. Really highlights how each economy has its own unique challenges.
And policymakers have to, tailor their approach.
Exactly. No one-size-fits-all solution.
Okay, let's talk economic signals, those flashing lights telling us where things are headed. Honestly, it's a mixed bag out there. On the one hand, we have record Thanksgiving travel in the U.S. People are spending, feeling confident, despite all those potential trade issues.
That's a good point. Consumer confidence is a key indicator.
But on the other hand, China's industrial profits are shrinking.
Yeah, and we're seeing dips in consumer confidence in both Germany and France.
Okay, so some good signs, some bad signs. No wonder those central banks are being so cautious.
It's tough to make a call when the signals are so mixed.
Now, let's talk about the markets. It's almost like they're living in their own little world, Despite all the global uncertainty, there are pockets of, dare I say, optimism.
It does seem that way. Yeah.
For example, U.S. Treasury options are suggesting a potential bond sell-off. Now, I know bonds can be a bit of a head-scratcher for some people, but essentially, a sell-off could mean investors are expecting better economic news down the road.
Right. They're anticipating growth. It's like a bet on the future.
Exactly. And then there's China. Their markets are rallying, driven by hopes of economic stimulus.
And what's interesting is where some of this optimism seems to be coming from.
Oh, yeah. What's that?
Online chatter. People are buzzing about a potential economic meeting happening sooner than expected.
Wow. So social media is driving market sentiment now.
It's a fascinating window into how information spreads and influences investor behavior, especially in a place like China where, traditional data can be harder to come by.
True. It's a unique insight. But before we get too carried away with all this optimism, there's a potential snag. Chinese retail investors are pulling out of local ETFs.
Yeah, that could definitely increase market volatility.
Exactly. It's a good reminder that even when things seem to be going well, there are always underlying risks that can change the game in an instant.
The markets are a fickle beast.
All right, time for a little tech twist. Apple, the company that practically defines smartphones. Well, they're actually lagging behind in the global smartphone rebound. They've taken a pretty big hit, especially in China.
That is surprising.
It is. So what's the deal? Why the sudden stumble for the tech giant?
Well, I think it ties back into that whole trade war situation we were talking about earlier. Remember strategic decoupling?
Oh, right. Cutting ties with China.
Well, not cutting ties completely, but, reducing dependence. And it seems U.S. tech companies, including Apple, are trying to get ahead of things.
In what way?
They're ramping up parts production in China, like right now, before Trump fully takes the reins again.
So it's a way to, soften the blow of potential tariffs.
Exactly. It's a strategic move, but it also highlights the tricky relationship between the U.S. and China in the tech world.
It's a balancing act, for sure. And speaking of tech, South Korea is considering a massive, $10 billion support package for its own chip makers. What's that all about?
Well, it just shows how competitive the global tech landscape is. Governments are stepping in to support their own industries, realizing how important tech is, strategically and economically. It's like a race for technological dominance.
And the stakes are high.
Yeah.
Okay, let's shift gears for a moment and talk about geopolitics. There's been a bit of good news recently with that ceasefire between Israel and Hezbollah, brokered by the U.S.
Yeah, definitely a positive development. But, we have to be realistic. The situation in that region is fragile. Achieving lasting peace means addressing the root causes of the conflict.
Absolutely. It's a complex situation.
Right.
And unfortunately, there are other conflicts going on around the world that remind us that, geopolitical tensions are a constant threat to global stability.
Sadly, that's true.
So, taking a step back, looking at everything we've discussed today, what's the takeaway? It's a complicated world out there, full of uncertainty.
A world in flux, you could say.
Exactly. We've got economic uncertainty, trade tensions simmering, central banks being cautious, and then these little bursts of optimism popping up alongside some serious risks. It's a lot to process.
Like moving parts.
So here's a question for you and for all our listeners out there. What do you think is the most significant development we talked about today? And what kind of ripple effects do you see it having? Something to think about as we all navigate this ever-changing world.
It's a question worth pondering.
Well, that wraps up our deep dive for today. Thanks for joining us, and as always, stay curious and keep exploring. We'll be back soon with another journey into the forces shaping our world.
Until next time.
See ya.